Hi. Hi, Zoria. Hi, everybody else who's joining us live or watching a recording. This is Multifamily Her Show, and we have a very special guest for you today. Zoria, do you want to do the honors and introduce our special guest?
Absolutely. So today we have Jennifer Hunt, who I've known for quite a few years. And so I'll go kind of introduction for her is that she is an international real estate investment expert, former vice president of the research for the real estate education company, and now she's the chief intelligence officer at the Real Estate Wealth Lab and the sponsor of Venture with Adventures. So really excited that she's here. She has over 21 years of investment experience in management and development and has financing in excess of $25 million US in projects. And she just, always is so willing to share her knowledge and experience and all her resources to help others, succeed in real estate and create their financial freedom. And I'm just really honored to have her here because she's a veteran of the real estate investment business and she just has a ton of experience. She's also just known for her research and her analytical expertise of researching markets and strategies. And we're going to get into all of that today. So welcome, Jennifer. We'll add you to the stream. I'm really
Thanks
happy
so
to have
much,
you here.
Hi,
Zoria.
Jennifer.
Everyone. Thank you. Thank you. It's great to be here.
So happy for you to join our Multifamily Her Show. I've been the biggest fan for so many years now, and I still can't believe this is happening. And thank you so much for inspiring so many women. Invest in real estate and do it intelligently with data and take the fear away because you put intelligence into investing. So thank you so much.
Oh, well, my pleasure. And yes, let's get more women investing in real estate for sure. It is a bit of a man's world, so let's change that.
Yeah.
That's our mission.
Good job.
Awesome.
So, yeah, Jennifer, so do you want to start telling us, the usual, this interview starts with like your story. What's your story? How did you start investing in real estate? It's been like so many years. So, how
Yeah,
did
it has been a lot of years, but it's still the same story of how I got started. And I got started because, well, I got laid off from a job that I'd been with for 14 years. And I'd been with the company for a long time. And I kind of thought, at that time, join a company, stay with the company forever, all of that. And that was not the case. And it really rattled me. I felt extremely financially insecure. I had some savings and things like that, but like that was how I was paying my mortgage and, paying for my groceries and stuff.
Mm-hmm.
And I really didn't expect to be laid off given that I was, top performer and all of these things that one does. So it really took me by surprise. And at that point, a girlfriend of mine actually shared the book Rich Dad Poor Dad, as many people have been through and read. And I read the book and I went, oh, this is interesting. There's a way for me to take my financial future, my financial security in my own hands. And then I went out and I did all the courses and you name it, business courses, real estate courses, et cetera, as much as possible to learn, and then started investing right away. And then it was around like 2010-ish, 2009. And then by 2013, I had 50 doors, many of them in apartment buildings. So I know this is multifamily her. So
yeah.
straight for the jugular in a 10-plex, an 8-plex, and a 24-plex within 3 months.
Wow.
And then the rest is history, really. I recognized the importance of research in around sort of 2015, 2016 to take properties and the cycle, understanding the real estate cycle in a much more robust way. And I have a bit of a penchant for it. I totally like to geek out. I love spreadsheets. I love math. I can't even believe I'm saying that, but I don't do math, just off the cuff, but that's why we have tools like spreadsheets and whatnot. And I really wanted to learn for myself, but then also help other people make really informed, smart decisions and time their investments effectively.
So did you start With multifamily investments, is that how you just
I
straight and started investing full time in real estate?
Pretty quickly, but not. No, I started with a a townhouse actually for myself, my own home, and then got into a condo, and then a duplex, in a very small community, which ended up doing well over time, but I don't recommend it. It was in a terrible community, in a terrible neighborhood. I learned a lot of lessons. My tenants, oh bless them, they were not, they had some challenges themselves. And so that was a really tough lesson, but I kept going, of course, and I held that for a long time. And then quickly ran out of money, and qualification funds and all of that for mortgages. And then that's when took the leap into multifamily, because it's based on the business. So in terms of banking and financiers and getting money towards it, it's a lot, it can be a lot easier actually.
To qualify, yeah.
Yeah, yeah, because you're qualifying the building as a business. You
Hmm.
still have a personal. This is a misnomer, is that some people think, oh well, I'll just get into multifamily and it doesn't matter, about me. It does. You
Yeah.
still are a personal guarantee. You're not getting off easy, for sure. But it is a lot easier to have the way the banks and financiers look at the property. They do look at it more as a business, and I wanted to make it into a business. So. Um,
Yeah.
that was the big leap.
Yeah. And where was that first multifamily?
The first multifamily was in Sarnia, Ontario,
Oh,
and
yeah.
then the rest of them was actually in Chatham, Kent, Ontario, for the multifamily.
So is
Now
that
I've
like
owned
a secondary
properties.
market?
What's that?
Are those secondary markets?
Oh,
Are you considered
tertiary, actually.
tertiary? Okay.
Yeah, yeah, yeah. They were one step further, and it's okay. Like I think, what people need to, I'm going to actually share this story, is people need to know where their markets are and what their risk tolerance is, and
Hmm.
and weigh all of those together. And a lot of individuals are sort of like, oh, okay, well, especially in multifamily, they talk about cap rates a lot. And I noticed on your recent social media posts, you're explaining what cap rate is. So for those of you who don't know, it's your net operating income and your purchase price, and then that gives you a rate. And you really do want to have. It's not necessarily about getting the highest cap rate. So when I first came out of all the courses that I took, they're like, you have to have a 10 cap or better. I'm like, okay. Well, the thing about cap rate is it's really about, it's understanding what it sort of shows you is, and I know you guys know this, of course, but for those of you out there who are wondering, what the heck am I looking at this cap rate for? It's about, if you were to pay for the property basically in cash, because it doesn't include your debt servicing, what would you yield? What would the property actually provide as a return on investment type thing? So it's just one of the key performance indicators that one looks at when looking at multifamily in particular. Now, to say get a 10 cap or more is a pretty big statement, especially in these days. Cap rates have typically sort of come down, as prices have gone up of real estate, and that's okay. But what I want to share here is that, so I found a 13 cap 40 unit apartment building. I'm like, hello, this is gold, right? No. So I went in and I found it. It was in a tiny, this is before I purchased any multifamily, but I was looking. And so this 13 cap, and it was in tiny, 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 tiny town in northern British Columbia. And I at least I didn't have formal training in research or anything like this at this point and whatnot, but I at least did some market research. And so I was at least smart enough there, and found that the town, which will remain nameless, it didn't have, well, a multiple economic base, basically. There
Mm,
was only
Yeah.
one main employer.
Yeah.
mhm.
Not
And
much
that
for an
main
industry. Yeah.
employer, no, and that main employer was a mine. And so, I did some research, and in fact, I got down into the mine, and
That's not
I
right.
didn't go into it, but I actually called them up,
Oh,
and I
yeah.
said, oh yeah, because this is tiny town, and I mean, I looked into their website. How many years do they have in their mine to actually reserves to keep mining it? So then I called them, and they told me that there was, like, I can't remember the exact number. It's irrelevant, but it was somewhere between like 7 and 13 years left of
Mm,
reserves that they're going to
yeah.
mine. So then what's going to happen to the town in 7 or
Exactly.
13 years when I've got a 40-unit apartment building, but at a 13 cap? Yeah, no. So cap rates really are an indication of risk. And so back to where I started in terms of tertiary markets, I knew that at least they had lots of growth. Like Chatham-Kent is an amazing place to invest because it's got a ton of growth and a huge, diverse economic foundation. So there you go. That's a little bit about cap rates.
Nice. Yeah, I always like to say, yeah, it has to do with risk. Like the higher the cap rate, it's often going to mean the higher the risk. It's
Yeah.
and the higher the cap rate, not necessarily the better, right?
Yeah. And so, again, like back to that point. So in Toronto or downtown Vancouver, you might get a one cap. And sometimes that's okay because you want to have your portfolio and your money doing different things at different times. And sometimes having it in a good, solid, long-term investment where it's going to still appreciate is fine. So I'm not opposed to all of those markets, just making sure that you know what you're doing and the reasons why.
Yeah. I want to go back to like your timeline. You said like 2015, 2016, that's where you got more into like the research side of things. Can you tell us more about that?
Yeah, I had actually been working at the Port of Vancouver, and guess what? The port is mostly a real estate company.
Oh,
They're
yeah.
essentially
Yeah, tell us about
yeah,
it.
yeah. They actually are. The ports in general, and I don't know how they work around the world, but anyway, the Port of Vancouver and ports in Canada, it's federal land, if you will, and it's an arm's length organization from the federal government, and they own. We Canadian taxpayers own all of the lands that the terminals are on, where the ships come in and offload their cargo, et cetera, et cetera. And so each of the terminals are actually tenants. And so what I got into is recognizing, and I was a strategic communications advisor or something like this, writing speeches for the CEO and the CFO and the chairman of the board, and understanding what really was underneath the actual activity at the port. And that was all of the economic fundamentals, global GDP, Canada's GDP, Vancouver's GDP, and then what it meant as a quote unquote port slash landlord and their tenants. So I started that was actually in 2014, and really starting to recognize what we need to be looking at as investors in real estate ourselves is these economic fundamentals, these leading indicators that really propel and drive our real estate markets. And that's how I got started in research, and I loved it. So I kept on going.
Nice. Yeah.
Another layer to that, though, Zoria, thank you for asking, is there's one side of it that's the research. There's also another side of what I love to do and contribute to people, is understanding the news and the headlines, because they can be so scary.
Oh, yeah.
And what they actually mean to real estate investors. And so I got into that in 2005, actually. I did my master's degree in communications, and my thesis was basically that news is getting more sensational, check, and that sensational news can impact democracy. Well, basically, that means that we need to understand how the media creates news, why they're creating it, who their audience is, how they make money, and then starting to recognize, if we look at multiple sources of data and interpret them differently, what story do we actually get for real estate investors? And so I layer on those two elements of the current news, the current studies, the biases. Yes, there's biases. And saying, okay, you know what? We don't need to freak out here, or yes, we should be freaking out here, and this is the solution for it. And then marrying it with the actual research of market analysis.
Yeah, I find that so beneficial when I've heard you speak over the years, and it just gives kind of some sense of calm, and you kind of feel like you have some control of your business because you understand kind of fundamentally what's going on, and you're not emotionally like on some roller coaster every headline that comes out. You understand why, and you peel back behind the headline and just say what's really going on. And like it's just Yeah, that's a big thing right now. Like with there's so much talk about interest rates and inflation, and
Mhm.
there's so much fear that comes
Housing
with
market bubbles.
yeah.
Yeah. Well, and don't get me started, or you can get me started on inflation, but you know that, oh my word. I do believe that about inflation, let's just have a little chit chat. So,
Yeah,
hello, government and politicians. Take an economics degree. I'm absolutely astounded. Like, it's absolutely remarkable to me. And yes, this may be a little bit poignant, but the lack of education and economics grounding that is going on in our governments these days. I really am curious to know why they're choosing to they're either ignorant, quite frankly, or they're actually choosing to not share this information. And so when it comes to inflation, I mean, here's a key example. So in 2020, we all know what happened. The government printed a lot of money and then they circulated it. And I'm saying the government broadly here, but they printed a lot of money, they circulated it, and that is what creates inflation. Full stop. That's it. That's been the number one only cause of inflation there's an extra element. I'll be more specific. So it's when the government prints money, circulates it while the economy isn't doing very well. That's the other layer to that. And guess what? We had all of those three factors in 2020, and then it kept going and kept going and kept going. And so at that moment, we knew that we would have inflation. And if you've been hanging around with me, I would have told you we can expect inflation. And then what was it in 2021? Early on, they were saying that inflation was transitory. What? No, like it's an actual impossibility. And then my favorite was in January 2022, the market consensus by economics, chief economists, let's call it, for financial institutions even. So this is kind of a curious matter. They all said that inflation would disappear, quote unquote, disappear by the end of this year, 2022, by December 2022. It hadn't even started. It has not started, ladies and gentlemen. Inflation is here. It is here to stay. It's growing. It's going to expand. And I know that we're talking about interest rates these days. And yes, they are going to go up further because that's the nature of the beast. So there we are. That's my opinion.
Yeah.
And do you think at some point interest rates would stabilize, or like at
At
what
some
point do you think they would stabilize?
Yeah, at one point they will. I think it's a little too early to tell, based on its sort of politics, really, and policies that are going to come into play, as opposed to what needs to be done. But I can tell you from an economic theory perspective, what actually has to be done in order for inflation to actually disappear, for it to stabilize. So for inflation to stabilize, interest rates are one of the main levers that a government has. I should say central bank, but that's the government. So a central bank can increase interest rates, and that will help reduce inflation. However, what most people don't know is that your interest rate actually has to be a couple of points higher than the inflation rate to have any impact. So in economic theory, what our inflation, okay, let's call it 8% right now, 9, 7, whatever, it's in that ballpark. So in theory, our interest rates would actually need to be somewhere in like the 10% or 11% in order to have any impact. Meanwhile, inflation's had a 2-year run. Like it's because it's a lagging indicator. So remember, the government printed the money. 18 months later is when inflation came in. And guess what? September 2021 is when inflation went up. It was actually a 33% increase, but people don't talk about that. But it was actually 33% when you start to do the actual math. But regardless, so it went up just on time, just on schedule, as expected. So back to the interest rates. Now there's a lot of other factors there, so I don't want to spook everybody, because and we're talking largely in Canada, but I do the U.S. market as well. So whichever one, and I know you guys invest in the U.S. So if you want me to switch gears to the U.S., I can easily do that. It's a very similar story, but so let me know. But in Canada, what we're seeing for interest rates is the Canadian GDP, the economic activity, the output, about 20% of it is based on the, and if not more, is based on real estate. So if the interest rates go too high, that puts an impact and a jeopardy on the real estate market. And so that would impact Canada's GDP, and nobody wants that from a government perspective. So they'll be sort of maybe tempering the interest rates a little bit, but also their Canadian and our US governments have debt, the highest debt ever, and they have to pay interest on that debt. So if the interest rates go up, that could also have a very significant negative impact on our government's debt and ability to pay that. So
yeah, that's huge. Like that's such a big difference between like, what now versus the 70s and 80s, right?
Huge.
And then currency devaluation happens too, right? Was that?
Sorry, say that again.
Currency devaluation happens as well. When
that is inflation, actually, yes. So that's another misnomer, is that many people, you'll hear, oh, labor shortages, or oh, oil or pipeline or supply chain. None of that is inflation. That's supply demand, and that will increase prices for sure, but price increases are not inflation. Inflation, to your point exactly, is that it is currency devaluation. And what that simply means is that the same amount of money, it's not that that prices are going up, it's the same amount of money won't buy you the same amount of things. That's it. And that means your currency is devaluing. So great point.
I am really, I'm looking at all of this, and what comes to mind is affordability. This is one of the things that government is worried about. You hear all these things in the news coming out. People are complaining about their landlords, then landlords are complaining. So nobody's happy right now. And where is this all heading? I don't think that interest rates will positively impact affordability, housing affordability in Canada. Like, do you have any thoughts on that?
Oh my gosh, do we have an hour and a half? The answer is yes, I have a lot of thoughts on affordability. And in fact, last September and October in my real estate wealth lab, the research lab that I do, a monthly webinar, in both of those, I actually really brought out to light affordability challenges. That was because we were going through an election. And so I actually took the three main political parties in Canada and their platforms and their positions on housing affordability, and then kind of layered them over in terms of, and it put them in a Venn diagram. For those of you who know me, yep, Venn diagrams. Layered them on to see which one would be more likely, but then further really unpacked it to say what would actually work and what wouldn't work. But then also, and I've spoken with politicians about this plenty of times also, is there's more to housing affordability than what they're thinking of. So yes, supply is major. So major. We need more supply. Canada is like one of the lowest in the G7 in terms of housing to people ratio. So we've got a huge impact. The US is very similar, and more on that. So let's take aside the supply. But what are some other things is what you are asking. And what about insurance costs? They've risen 400%. This is just homeowners, right? Like, forget real estate investors, okay, sure, and all of that. But homeowners, we're having to deal with a 400% increase in insurance if you can even get it. Now, that would be something that a government could actually maybe start getting involved in. Not that I believe in more government, I'm going to say overreach. Yes, I am. However, like, there are other things that we could consider, and insurance is one of them. Rising costs of, you name it, utilities, which are often provincially owned. For example, like electrical companies in provinces. So those have risen a huge amount. Property taxes, those are at the municipal level. So yeah, like in Vancouver, not that long ago, for example, property taxes went up 7%. And yet, as we know, in Ontario and British Columbia and other provinces, there's rental caps. So which means that landlords can't raise their rents more than the rental cap prescribed by the government, which is typically well, they say it's in line with inflation, but it clearly is not. So I think I won't say, but it's somewhere in between, like, 1 and 2% these days generally. Which, if you have just your property taxes going up, you're at 7%. You have your insurance at 400%. There is a big delta, and so that is a problem, and it's a very big problem for affordability. And there's a couple other things. I won't go down those turkey trails right now, but I do recommend, if you don't get my newsletter, my weekly newsletter already, I highly recommend you get it, because this last week I talked about affordability in a different way. Now, there's some studies that show that affordability really only impacts about 11% of Canadians. And I thought that that was a really interesting way of looking at it. I'm not suggesting that we don't have a problem, we do. But it was a neat study that started to unpack, okay, if tenants or our clients, they move, that's when it's impacting them the most. Because that's when they can, that's when they're dealing with higher rents, for example. But many are in, if they stay where they are, they're in, rental caps. It's, there's only so much movement. So it was an interesting, I haven't heard and seen that perspective before. So it is in my newsletter this week. I do recommend it. And you'll be hearing more about that for sure.
And how do people sign up for your newsletter, Jennifer?
Oh, thank you. Yeah. They can go to the Real Estate Wealth Lab. And actually, we have a, .com, realestatewealthlab.com, and we have a free trial for 14 days. So you can kind of come on in, check us out, test out all of the calculators and the research, and oh my gosh, all of the information that we have available to real estate investors.
Awesome. Thanks. I want to go back to, like, see, everyone's like listening to, interest rates going up, inflation, and a lot of people are probably just not doing much. But like, if someone were to take action, want to still continue investing in real estate from your like background of repositioning real estate, what's the best strategy these days?
Oh, that's a really big question.
Yeah.
And I'll kind of tackle it in two different ways. One is what you were talking about in terms of like financially and things like that. But another one I think, which is the most important, is actually understanding yourself.
Mm-hmm.
I know that might sound really esoteric, if you will, but understanding what your risk level is, what your tolerance is, what will allow you to sleep at night, feel safe, secure, while still growing a portfolio. And I think, it's the time in the market for real estate is better than timing the market. So in other words, get in, buy, long-term hold, make sure cash flows, and you know what? You're going to be okay in the long run. So my recommendation is that when you actually do the math, and yes, I have spreadsheets for this, and even just a worksheet, like just a quick little worksheet, when you do the math of what you need in the future, and fast forward 25 years when your mortgage is paid off, most people only need a handful of properties. Like, and I'm talking just like sort of like a single family, or $400,000 property, whatever, a condo, it doesn't matter. But you really don't, I shouldn't say you, most people, when they actually do the math, again, they don't need that many, so don't stress out about it. Like 3 properties can make a material difference in someone's life, and in 25 years when it's paid off. And then there's ways to accelerate that payment. So I would really start there. What do you really need, and how much do you really want to stress? Okay, now stepping back in terms of strategies for interest rates, that's again making sure you take that into play. But there's a really good opportunity, and my research and my real estate cycle formula, which includes inflation, interest rate, and over 30 other indicators, is really leading indicators and the lagging indicators, and really shows that we're going into a softening for 2020 this year, 2023, and 2024. So 2.5 years of a softening that is not fall off a cliff, nothing like that. So don't freak out. But this could be for those who are well positioned and know what they're doing, such as you folks. Maybe people want to invest with you because you know what you're doing and not doing it themselves, which I'm a big fan of, and we'll get into that. But buying, this is now the time to buy what we've got going on, and also getting in while interest rates are lower, because they are going to be going up. So this is really a huge opportunity for individuals to buy. And then after sort of 2024, all the indicators at this time are suggesting a very long-term, modest, slow growth, an expansionary period. So
That sounds great.
buying. Yep. So that's what I think about the matter. Yeah. And I also want to just touch on a little bit more on, I don't think that real estate is for everyone. I believe that the asset class of real estate is for everyone, but it is it can be trying. I mean, you guys have had, I'm sure, trials and tribulations, and it's
Sure.
tough.
Especially when you're the working partner, right, Jennifer?
That's exactly what I mean. As you 100% as a working partner. I know a working partner who, and I won't say her name, but she is formidable. Okay, like this lady owns a lot of real estate and won't even look at anything that's less than 300 doors for an apartment building. Okay, and owns many of those. And I remember at a talk once she was mentioning how she was like basically dry heaving on her kitchen floor when she was putting in an offer on a big property. And you just like, you keep layering up, but it can be stressful for that working partner. And so my recommendation truly is, I mean, it works for a lot of people to do it yourself, DIY. And I believe that there's a really, really big opportunity for individuals to don't do it yourself. DIY is the new way to be in real estate, in my humble opinion. And to partner with, folks like you, for other individuals who are masterful in their space. And then you get the benefits of, expertise, management expertise, all of the years that they've put into play, and you get the benefits of real estate without necessarily having to learn it all. I definitely recommend learning it. Absolutely. You want to be investing. If you're a DIY, don't do it yourself. Learn about it so that you can be, hey, Jennifer, like, I think that this is the right thing to do. What are you doing? What do you know? And ask good questions. But partnering with expertise is a really great way to do it.
Yeah, because it could really streamline the process, like get you going faster, right? Or do you want to take 2 years learning what to do and then you kind of miss this opportunity to buy? Right?
Yeah. You know what? I'm actually going to say 1,000%. Yep. It's such a steep learning curve, particularly in multifamily. I jumped in both feet and went for it, and it was great in the end for sure, but there was definitely some stressful moments, and I could have learned maybe if I had put some money into somebody else's project and learned with them later on. Now that I've done multifamily for years now, I actually got some joint venture partners who they wanted to do multifamily, did a couple of presentations on multifamily on just an offer on a multifamily apartment building. And it took an hour. And most people were like, that's just offer. Oh my gosh. The step-by-step how to buy a multifamily. And because it's different, it just takes longer, and there's all these steps,
so
and
much
right, and tips and tricks. And they said, you know what, I want to be a multifamily, but if that's just the offer, I am not interested. And they came and joined me as a joint venture partner and got to experience pieces of it. So, here you can do the working partner activities of this, and while we're kind of overseeing things and helping them out. So it was really that's a great way to do things also. Partnering again with expertise.
No, 100%. Yeah. Jennifer, I have a question for you in terms of your favorite books in real estate and self-development. Are there any that you would recommend?
Well, I already mentioned Rich Dad Poor Dad, which is kind of a quintessential sort of foundational one. But I actually have, which way do I want to go? A couple of books I do like to read, but okay, you'll probably know this one. But this is The Canadian Real Estate Cycle, The Secrets of the Canadian Real Estate Cycle by Don Campbell and Kieran Trass. And this is not a well-read book, by the way. This is a dense book. And when I read it, I recognized that it would be challenging for individuals to really put their head behind it. And so I created a methodology and a spreadsheet behind the scenes. And then I actually last year, I love this. I woke up in the middle of the night. So I've been studying this and implementing it for years. But I woke up in the middle of the night and I came up with this.
Oh, wow. Based on the book?
And this. And it's really pretty, I know. But what it
Yeah.
means is what's missing in a lot of real estate cycle type activities is that they're missing what I call reverberation, and these nuances of the leading indicators impacting lagging indicators, and some lagging indicators impact leading indicators. And it's basically, I called it this bathtub effect, kids in a bathtub effect. You have kids?
Yeah.
And you put them in a bathtub before? Right?
Oh, yeah.
And they're just like splashing everywhere, moving all over, water everywhere. Well, that's exactly what the economy is doing right now in real estate. And so I wanted to be able to capture that that splashiness, that reverberation, the cacophony out there in a more elegant and captured way. So I know it doesn't look like this in my spreadsheets and behind the scenes, and that's where I'm working with the Real Estate Wealth Lab to create the technology to even capture the weighted impact of, like if you've got a bigger kid in that bathtub, it's going to move more water this way, but maybe you've got 3 kids moving it this way. So what's going to happen to your actual real estate cycle? And so that is that's a really big important piece of my life, and I am a total geek about that. But I'm also really into intuition, and so and following our inner guides. So I'm a bit spiritual, if you will. And I've actually just read this book, Manifesting Your Magical Life. And I flipped to it when I first opened it. And the page that I got to was, let me see if I can find it. I think it doesn't really matter. Oh, yeah. It says, getting your magic back. And I think that this last number of years with the government imposed restrictions due to the pandemic and it's just been stressful for many people, is that it's time to get our magic back and really implement that. And I believe in science and magic, if you will, coming together for even more informed decisions that are right for you, or for me in this case. So those are kind of what I'm up to.
I love that.
Do you have any plans of writing a book?
Well, thank you, publishers. Yes, I have a number of publishers who would like me to write a book. And I actually have the book outline, the book proposal. And so now it's just a matter of doing it, I guess. And it would be definitely, they'd like it to be quite business-like in terms of real estate. But there's also some little elements in there, I think, of my personal stories of what I've been through in real estate, and hopefully that would help make it a little bit less dense. We're hoping.
I would really read that book. I can't wait.
Okay, well, thank you. I'll
Can you tell us more about what it would be about?
Definitely the real estate cycle formula and the 30 plus indicators and how to apply it and what it looks like, and in a way that is just more accessible for individuals. As you know, I like to take complex things and make them simple. So it would certainly be about that. And then a couple of other things like, so here's a story. So when I was younger, I was actually a farmer. I worked on a vegetable farm for 5 years, picking vegetables. And then for a couple of summers, I was a ranch hand, like herding cows, on horseback, herding cows, herding horses, etc. And this one ranch that I worked at, it was my first ranch, and it was outside of Edmonton in Tomahawk.
I don't know. Do you know where that is?
I've heard that before. Yeah.
It's tiny. So, and it's outside of Tomahawk, so it's even tinier. But near Spruce Grove, kind of.
Oh, I know Spruce Grove. Yes.
Okay. Yeah. Okay. So it's kind of a little bit south and a little bit west of there, and huge, massive ranch. And there's these guys who have been clearly there for a long time, and they know the ranch super well. And thankfully, they put me on a horse, 27-year-old horse, who also knows what the lay of the land is, but I don't. And so I'm out there, didn't ask for an orientation. I didn't ask for their insights. I didn't say, hey, is there anything I need to know about this, place, whatever. No, I'm just out there herding cows. And I did notice that on the ground, there was like dead grass with water on top of it. I've never seen anything like this before. Then all of a sudden, My horse is gone, and I'm standing on the ground. Quicksand,
Oh
essentially.
boy.
So this whole section of this ranch is actually peat on top of like a bog. I didn't know this. I didn't ask. And then all of a sudden, horse went down. Thankfully, the horse knew how to get out of it and was able to get out. And so everybody was fine.
My
Thank
goodness.
you. But I could have avoided that mistake in a very by simply asking the old ranch hands, hey, what is the lay of the land, like literally, or what do I need to be paying attention to, or any of those kinds of questions could have really prevented the issue. And again, it didn't materialize into anything, but it was certainly scary at the time. And when I relate that and think about it when it comes to real estate, what are the questions that you aren't asking, and what do you not know, so that you don't have to go through quicksand, or the equivalent might be some form of like bankruptcy or challenges or whatever have you. And a lot of it can be prevented by asking experts such as me, such as yourselves, who've already gone before, who can help you avoid those kinds of things. So little stories like, who knew that being on a ranch would be useful to real estate? But there you go.
You
I like
perils for
it's not
sure.
just about like asking more questions either. It's like, what questions am I supposed to be asking? Right.
And exactly, Zoria. Like so many, I mean, you don't know what you don't know. So
Exactly.
getting those questions really in play for people so that they can have a good leg up.
Yeah, exactly.
So, Jennifer, it's been 40 minutes and we are conscious of your time. And Zora, did you have any specific questions? I wanted to ask a couple last
No, go
questions.
ahead.
So, Jennifer, what is one question that you wish we would ask you that we didn't, and how would you answer that question?
Speaking of questions.
Right. Yeah. What question would I like? I think an important question for individuals that they don't think of when they're getting into real estate as much as I think that they may want to, and it's not a topic that most people talk about, is the clients that they want to have. We talk about the properties, the multifamily, or do you want single family, or do you want condos, or whatever. I like to look at it a little bit differently. I've come to learn this. I didn't know this to begin with. Like I said, my first my first duplex, the clients, they were an interesting lot. And I now that I know what I know, I come at it with people first.
Mhm.
And that's something that's really important to me. So, for example, I love renting to university students, not student housing and cramming people into whatever. No, just normal properties, whether they're condos or apartments or suites or houses, with the right amount of allocation and all the bylaws and zoning requirements. But I really appreciate um, the difference that I can make in their life by providing really good, safe accommodations for them. And many of them are international students, so I would like to play that role of making sure that they're safe, because they're away from home and they're away from their countries, and it can be scary out there. So that's something that I get a lot of joy from, and I've created amazing relationships. I mean, I have now children. They call me their Canadian mom all
Aw.
over the world. And so I delight in the type of client. And then other clients that I love is my vacation rentals. So not just the rentals, amazing people who are on vacation having a great time, but also collaborating with owners who get to use those properties and have lifestyle vacation rentals and lifestyle real estate in their portfolios as one piece of the puzzle. So I think that maybe when you're talking with individuals and
Mhm.
the folks who are listening today, is maybe when you're thinking about what you want your properties to do for you and your lifestyle and your money and all of that, and when you want to retire, but also think about the types of clients that you want to deal with. Even if you have a property manager, doesn't matter, but see what you can get from a little extra joy from your real estate.
Right, exactly.
That's a
So
good
that's a
perspective,
good
because
role.
people have this in perception that like you're gonna have to deal with difficult tenants, like no matter what. But it's like no, you there's all sorts of different people out there who prefer to rent, and yeah, there's such a variety of people you can work with. And I'm glad I learned that from the early on. It's like, who do you want your tenant to be? Do you want like a family? We went
That's
with
with
like,
that. Yeah.
young families that are moving to Alberta from somewhere else, and they've maybe owned a home before and they're just getting established, and they may not rent for as long, but they're good tenants.
And
Until you
that's
buy the
great
properties that they want.
because, and that's important, Zoria. And I will share that one of the reasons too about the students is that they're typically, I mean, sort of the max would be like 4 years if they're doing and staying for their entire program. But that's a good thing in an area where there's a rental cap, because you do want to have some turnover, let's face it, so that you can get market rents. So it's a nice balance. So it's your point.
Yeah. Luckily, we don't have to deal with that here in Alberta.
With rental caps, yeah.
Yeah, but
Even though I've heard some talk online mainly, there's a real fear out there right now in the landlord community in Alberta about
About the rental caps.
Yeah.
Well, technically, I know this is I can geek out for forever, but technically, Alberta does have a rent cap. It's different in terms of controls, I should say, insofar as that it's more about the frequency than the amount. So you're technically only allowed to increase your rents in Alberta once per year, I believe it is, but the amount isn't regulated. So,
but you're right.
That is technically a control.
Time cap.
Cap. You're capped by the market, like whatever the market will bear, right? You can't just charge whatever you want, and then nobody will rent your place.
And that's how it should be, quite frankly, because sometimes it'll have to go down. Sometimes it'll have to go up, but at least it would be the right balance.
Yeah. Jennifer, where can listeners and the people that are watching us find you online?
Oh, yeah. So I'm on Instagram, and don't mind the name, but it's the Jennifer Hunt. The reason for the is not an ego thing. It's just that Jennifer is the most popular name for girls for 25 years. It's in the top 5 in North America. So all the other Jennifer Hunts were taken. So the Jennifer Hunt on Instagram. And you can catch me at therealestatewealthlab.com. And if you're interested in learning more about vacation rentals and vacation home ownership and lifestyle real estate investing, I highly recommend you check out Ventures with Adventures. That's my new company, and it is about marrying ventures, as in real estate, with adventures, as in lifestyle. So that's a great thing to check out, and that's at yourvwa.com. So yourvwa.com.
Awesome. We'll have to post those links.
Yeah, we can post them.
Our videos.
Awesome. Thank you. I'd appreciate that.
Yeah. Do you have any final thoughts?
Well, I do. I would really like individuals to come and hang out with me more at the Real Estate Wealth Lab. I have host a webinar the 4th Wednesday of the month just on research. And we actually have a Zoom, and yes, we will have in-person things, but we're online right now, every Wednesday of the month, and now also on one Friday a month, I think, as well. And we are a group of investors who, whether you're just starting out or you're way down the line, we have something for everybody when it comes to calculators, tools, and in a community that's really connected. And when I talk about these types of books, this is the type of people who are in this community, marrying science with intuition and really good I'm just so grateful for the individuals who've joined us so far. And Zoria, you're one of them. So thank you for supporting us in our journey. It's a new company also. We just launched in January, and we're just getting started with major market research that I'm really excited to share with people.
That's awesome.
And speaking of the research, I do like that you are focused on Canada and the US, which many people are not. And so, yeah, a lot of research on both countries, which is really helpful when we're investing in the US.
Thank you, Zori, for bringing that up. That's huge. Yeah, we are one of the only companies that does Canada and the US. And I've been investing in the US since 2010, I think, maybe 2011, but regardless, a long time. And I felt that was a niche that was being sort of missed in the world. And a lot of Canadians want to invest in the US. A lot of Canadians, and we're actually hosting some specialized masterminds starting this week, no, not this week, next week, for international investing for Canadians or for Americans, whomever, but how to invest internationally. What are the steps? Do you talk to a tax attorney? You need 3 accountants. What? 3? Yes. All of these things, because I've been doing it for a long time, and I'm not the subject matter expert, but we've got lots of subject matter experts that we can bring into our fold for investing cross-border, wherever that is.
That sounds amazing. And that people can find out about this on your website?
Yeah, at the realestatewealthlab.com. And I recommend people, there's like a free trial too. So just give us a whirl. Our next event is on Wednesday, the 14th. And actually, for those of you who are interested in learning more about what the heck is going on in mortgage land, we have one of my favorite mortgage specialists, Carmen, from Pro Funds.
Oh,
and
yes.
you guys know her?
Yeah, through Keys Buyer.
Yeah, I've been working with her since 2010, really. And her and her company, she's amazing, and she does a lot of other things, investing in projects and things like that. So you can learn more about those. But we're really going to be focusing on mortgages. And one of the things that I love about Carmen is she's a straight shooter, and when you need someone in your corner, because it happens in mortgages. Has anyone ever had that issue? Yes, sometimes things go a little awry and you need someone in your corner, and she's gotten it done every single time, her and her team. And it really is. So, and we're going to be understanding what's going on out there with interest rates and mortgages. So that's on Wednesday at 7:30 p.m. Eastern to 4:30 Pacific, which would be, 5:30 in Alberta.
Awesome.
Okay. Awesome.
Well, thank you so much.
Well, thank you for having me. I really appreciate it. And I know that you folks are doing some amazing work and growing really fast. So that's awesome. And we'll see you probably on Wednesday too.
Yeah, for sure. Good. And thank you for trailblazing it for the rest of us women in this industry.
Yeah, it's really awesome. Inspiring, like, to talk to other women like that are, have had such success, and it just shows you can do it too. Like, and so that's like the whole reason for having these lives and introducing people to other successful women in real estate. So thanks for being on our show.
You make a really good point. Sorry, I just want to add to that is you can do it too, and you don't have to do it alone.
Yeah.
Remember, DDIY.
DDIY. I like that new term.
Yes. Awesome. Thanks everyone.
Bye.
Bye.